Aotearoa, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Oil prices have tumbled as the US seems to give up on most of its stated objectives, including the promise of safe passage for shipping, in a U-turn to extract itself from a losing hand. Crude oil prices are down more than 10% on the news, although it needs to be noted that the Strait of Hormuz remains closed. It is just market euphoria. We now need to start worrying about a permanent Iranian transit tax after the US walks away. The Gulf states who supported the US are about to be thrown under the bus. Financial markets don't care, of course, and like the end of the adventure. US mortgage applications fell again last week as interest rates rose, both for refinance activity and for new home purchases. This takes this activity back to September 2024 levels. And the US ADP employment report said their private labour market added 109,000 jobs in April, marginally more than the 99,000 expected. This sets up the official non-farm payrolls report for an expected 60,000 rise, with upside. Most of the new jobs are coming from aggressive hiring in their healthcare sector. After the prior week's outsized fall, this week the EIA reports another notable fall in US crude oil stocks. In fact, every metric fell other than US crude imports. There is certainly no relief at US petrol pumps yet, with prices now up more than 50% from their pre-Trump Gulf War levels. We have earlier noted the politicalization of US official data, especially in the US Bureau of Labor Statistics, who produce CPI, PPI, and labor market data. We weren't the only ones. A new analytical report has been looking at how this has affected the quality of their data and concluded there is a worrying impact from this trend. So we need to be skeptical, and the next big set piece reports is the April non-farm payrolls report. This means we will need to rely more on other non-Trump administration high-frequency market data. In Canada, their widely watched Ivy PMI surged into a strong expansion in April, and by more than expected. In China, new analysis shows Chinese companies are reporting lackluster earnings, with overall net profit declining in 2025 for a third consecutive year, as the property slump dragged on and more retailers posted losses, hurting employment and the economy as a whole. Meanwhile, China's recent Golden Week holiday has just ended, and reports are that there was less air travel this year, but very much more high-speed rail travel. Overall domestic holiday activity was up 3.5%, with air travel falling 5.7% year-on-year to 10.5 million passengers between the May 1st and May 5th holiday. Railway journeys were up 4.6% to 1.06 billion passengers. And staying in China, their non-official S&P Global Services PMI reports that their service sector expanded faster as new business picked up in April and the year-ahead outlook improved. Cost pressures remain modest from this giant sector. In India, their services sector saw new orders and output expand at a quicker pace, supporting hiring activity. They also reported a mild reduction in inflationary pressures. In the EU, they report rising cost pressures for producers, all related to higher fuel prices. Overall, they're up 2% in April from a year ago, but up 3.2% from March. There is quite a wide range of impacts depending on the country. Internationally, a new report tallying global debt found it at $353 trillion, and a strong shift away from US treasuries and towards big new demand for Japanese and European government bonds. They also found the overall debt-to-GDP ratio remained stable. The US Treasury 10-year yield is now just on 4.35%, down 7 basis points from yesterday at this time. And the price of gold will start today up $121 at $4,680 an ounce. Silver's up $4 at just over $77 an ounce. But American oil prices are down $6.50 a barrel to just on $95.50 a barrel, while the international Brent price is down $8.50 now to $101.50 a barrel. And the Kiwi dollar is up 60 basis points from yesterday at 59.5 US cents. Against the Aussie, we're up 30 basis points at 82.3 Australian cents. Against the euro, we're also up 30 basis points at 50.7 euro cents. That all means our trade-weighted index starts today at just under 62.8, which is up 50 basis points from yesterday. And the Bitcoin price starts today at $81,399 and up just 0.1% from yesterday. Volatility over the past 24 hours has been modest, at just under plus or minus 1.3%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.